Kitco News special coverage of the Precious Metal Summit is brought to you by Nucor Gold.
We're continuing our interviews at the Precious Metal Summit in Beaver Creek, and joining us today is an honorary guest of Kitco, a legend in this space, Rob McEwen, founder and CEO of McEwen Mining. We'll be talking about McEwen Mining, its performance, and its outlook, of course, with Rob. But welcome back to the show. I'm very honored to have you join us today.
Pleasure to be here, David.
Rob is an inductee of the Canadian Hall of Fame in mining and a three-time winner of the Kitco Mining CEO of the Year award. So definitely a fan favorite. You were also very prescient in calling for the Federal Reserve to raise interest rates by 75 basis points last time you were on the show 3 months ago. And since you were right last time, I'm going to start with the same question. What is the Fed going to do next week? Inflation number came out hotter than expected yesterday on Tuesday, and the expectation for a 100 basis point rise at the next meeting is now higher than it was a week ago. What's your take?
I like the 75 basis point. I'll stick with that.
Okay. So another 75 basis points. Do you think that inflation can be tamed by the Federal Reserve?
Not with interest rates as low as they are. The last time we had a real run in interest rates was the late 70s, and it took 18% interest rates to just tame inflation. I think the amount of monetary stimulation that has taken place in the last few years, the amount of debt that's been accumulated at all levels, ensures that we're going to have higher rates of inflation. And it's been compounded by the conflict of Russia and the Ukraine. COVID came along and disrupted supply chains. There's a lot of factors in there now.
And we're going to be focusing our conversation on mining today. So I would just pivot to talk about how mining has performed in prior periods of high inflationary environments. Let's take the late 1970s, for example. When you first started your career, was inflation an issue?
Yes, it was. I started when I started working, somewhere around 73, a long time ago, before you were born.
Okay, certainly. And the late 70s, so right after your career started in this space, hyperinflation, well, we wouldn't call it hyperinflation technically, but very high double-digit inflation in the 1970s. How did the mining industry or the resource industry cope back then?
Well, in just a point of reference, it was either 1980 or 81 that Canada savings bond rate was over 20%. You buy a bond, Canada savings bond, and getting better than 20%.
Right.
For 10 years.
Right.
So inflation went along, and then all of a sudden the rates went, Volcker jacked the rates way up, and down came inflation, down came gold.
People are saying that can't happen this time because the amount of debt we have now is not the same as it was back in the late 70s, 1980, 1981. The debt to GDP ratio is higher, the highest it's ever been. And so the Federal Reserve can't raise interest rates to that point anymore. So we can't ever see, 20%.
I'd never use the word can't when describing what the government might do.
Okay.
They always surprise us. But I just see, you're looking at energy prices going up, and that translates to transportation, fertilizers, all sorts of goods and services that require that. I'm not sure how you tame it right away, other than the government has to start curtailing its expenditures. And it should be opening the door for all sorts of investment and deregulating to encourage investment, to create employment that provides the tax base for the standard of living we're enjoying today.
Well, you've built your legacy in the gold space. So if a generalist investor were to ask you, Rob, why should I invest in gold today, given how badly it's been beaten down relative to 2 years ago? We're at $1,700. 2 years ago it was at $2,000. If you look at how inflation's performed this year, gold hasn't caught up with inflation, although it's outperformed the stock market tremendously. What would you say to somebody who doesn't understand gold, that maybe it's still a good investment today?
I think you're looking at preserving the purchasing power of your wealth. And just today I was out for a walk, and we were having a conversation, and the idea came up when the iPhone came out, gold was around $700.
Yes.
And today the iPhone's around 15, 13, 1500, and that's where gold is. And it has far more features.
iPhone to gold ratio
Yes.
has stayed relatively flat.
That's right.
Yeah.
So you're able to continue to buy, and you're actually buying a better product because there's more services on the iPhone of today than when it first came out. But gold kept that purchasing power, whereas the value of your dollar has gone down significantly.
Right.
I mean, if almost whatever you want to buy is going to cost you more,
Right.
from your groceries to your car to your dry cleaning to your insurance.
I don't know if this is something that anyone's ever asked you, but for an average investor, how much of their wealth should be kept in gold? Given that fiat currencies will inevitably lose value, in theory, shouldn't you have all your savings in gold and then just transfer it back to fiat when you need it?
I don't think that would work for most people. They'd be uncomfortable with all their money in gold.
Okay.
I'm probably an imprudent individual because I do something close to that. But I would say you should be looking at a 10, 15% in precious metals and hard assets, maybe 20%. You're going to see, I think, food prices continue to rise.
Yeah.
And the cost of living is just going up. It's getting harder for everyone to make their paycheck go all the way around.
Before we pivot to talk about copper and McEwen Mining and McEwen Copper, which is another subsidiary we'll talk about, I want to ask you about the future of wealth preservation. A lot of people say that is actually in the crypto industry space. Now, I know I'm at a gold conference, and so I haven't had a chance to ask anybody about cryptocurrencies, but you being a legend in the mining space, I just want to get your thoughts on how you think this space is developing, whether or not you think it's a competitor to the space, whether or not you think it's going to be, Bitcoin is going to be the next digital gold, or whether or not it's just going to be completely irrelevant.
Very interesting question. A number of years ago, I had Forbes called me up and asked for an opinion on crypto, and it was trading at around 120. And I said, well,
Bitcoin, right?
Yeah, Bitcoin. Yeah. And I just went, if it gains the confidence of the market, it could go up, like prisoner of war camp cigarettes were the currency, or puka shells in the South Pacific were currency. Never in my wildest dreams did I ever imagine it would reach the heights that it has reached. And I've never seen a currency appreciate like that. The one thing that crypto offered was you could buy gold, but if you want to take it to another country, you have to walk by a customs agent. Whereas with crypto, you didn't have to walk by a customs agent.
There's digital gold now.
Yes.
Yeah.
So now digital gold. The only question is, in this digital world, can you hold on to it? Are there enough safeguards that someone can't come along and take it out of your digital wallet or your digital bank account? And I don't have a sense. I think governments are going to bring out with cryptocurrencies, and that'll take some of the enthusiasm out of the marketplace.
Well, gold was for thousands of years used as a form of currency.
Yes.
Bitcoin is just starting to see that in some countries. Some argue it can never be adopted as a form of currency, for wide mass adoption given its volatility. What do you think needs to have, what an asset needs to have, the characteristics of an asset that will qualify it to become a medium of exchange, a widely accepted unit of account?
Well, it has to preserve value, preserve purchasing power, has to be transportable, it can't decay, it has to be recognized globally so that you could take it anywhere in the world and get value for it. And it's served that function through time over the thousands of years. Is digital the next wave? Is part of the virtual world becoming the real world? I can't answer that question.
What if someone convinced you, I'm not saying it will be, let's say hypothetically somebody convinced Rob McEwen that Bitcoin is the next gold, Bitcoin will be adopted for the next, global reserve currency. Would you mine Bitcoin? Would you take some of your money and allocate it and mine some cryptos?
It's very energy intensive.
Yes.
It might be more environmentally damaging than mining. You think of the huge amount of power that goes into creating these currencies.
Right.
They're not green at all.
Yeah, I think improvements are being made, but you're absolutely right. That is a concern. Well, I wanted to get your take on cryptos, and I did, so that was very enlightening. Thank you, Rob.
You're welcome, David.
It's not every day we get a mining legend talk about crypto, so there it is. Let's talk about McEwen Mining now. You gave me a pitch deck of where you think the company is going to go. So let's talk about where it's the journey of McEwen Mining up until this point. The share price performance over the last few years has been disappointing for some investors. Let's walk over what happened in the last couple of years. And you have this chart here that actually shows the price performance of the company. So walk us through the performance, what you think went wrong, what you think went right, before we talk about what you'll be doing from this point on.
Sure. Our performance over the last 3-4 years has, one word describes it, ugly. We've gone south, we've had fires, floods, write-downs of our resources, misguidance, we've changed our management to correct that, and we seem to be turning around now. As the largest shareholder of the company, today my personal investment in the company is greater than our market cap, and I own
$220 million versus $217 million. I'm looking at that.
So I feel the pain.
Okay.
But I do see a much brighter future. I see a value right now of underlying value of $6 to $25 a share, and a lot of that is going to be driven by our copper project called Los Azules, and we've created a company called McEwen Copper that we're going to do an IPO in the first half of next year. We funded it privately this year, and we just closed on an $82 million financing at the end of August. And the last money came in from a technology arm of Rio Tinto, and then a week later we signed another deal with the exploration arm of Rio Tinto for a property we have in Nevada, and they're going to spend, or committing to spend, $18 million to earn a 60% interest in that property. Okay. So, but the copper project is large. It's in Argentina. If you were to combine, and you shouldn't, but if you combine the indicated and inferred resources, there'd be about 3.6 billion tons of ore that would contain 29.5 billion pounds of copper, 5.5 million ounces gold, and 191 million ounces silver. If we took that and just took the copper price today and the gold price today and used that as a conversion feature, it's about 480 pounds of copper is equal to 1 ounce of gold. And you divided that into the 29.5 billion pounds, you would have a gold equivalent deposit of 60 million ounces. And with the preliminary economic assessment we had, that would be, the annual production would be greater than 800,000 ounces a year, gold equivalent, at under $600 cost. So it's a big project, 36 long life, 36-year life, relatively low cost, and I think that value has not been recognized in McEwen Mining because of all the operational challenges we faced. At one point, people just said, "I give up. I'm not going to look at the stock anymore."
So just to give some context to the viewers, the share of McEwen, the stock of McEwen Mining is currently trading at $4.64 a share. If you're looking at it on the TSX.
On New York, it's about $3.50. Yeah. I'm using U.S. dollars.
Oh, this is U.S. dollars, about $3.50. So you're looking at an 80% upside to 8 times growth over what time period, Rob?
Well, we're moving this project forward. We just started talking about it in earnest after we closed this financing. I think when people start recognizing the size of this deposit and the fact that it's going to be powered by the sun, and it has the potential.
So what do you mean powered by the sun?
It'll be all renewable energy, solar and wind. Okay. What we're trying to do is build a mine that's very different than what exists today. And so
An investor might ask you, wouldn't that bump up your capex to? I mean, they might appreciate what you're doing the renewable side, but wouldn't that be more expensive to build?
there's the power grid in Argentina. They have it's a solar and wind where we would be accessing the power. So they would be coming straight into our operation.
I want to go over this page here in particular because it does show what your priorities are when you're developing a project. So the Los Azules project is closer to the power grid than some other competing projects.
Yes, we're in the province of San Juan, which is probably the most friendly mining province in Argentina. And the Fraser Institute considers it the best jurisdiction in South America right now.
This is interesting. I've never considered this. It's lower in altitude than some other projects. Why is this important?
Well, I mean, here we are in Beaver Creek.
Yeah.
We're at about 8,000 feet above sea level.
Okay.
Do you feel short of breath ever?
When I jog, yeah.
Okay. Well, we're lower than 3,100 meters here right now.
Okay.
The higher you go, the shorter your breath is.
Right.
And that has an impact on machinery efficiency. They don't operate as well, and people don't operate as well. So we're at 3,100 to 3,600 meters. The other two companies I'm talking about that are in the same province, they're copper projects, they're at 4,000 and 5,000 meters.
Yeah.
I mean, that's way up in the sky.
And the cost, going back to cost, you're actually in, according to Goldman Sachs, the lowest cost quartile. How did you manage to achieve that?
We'll be mining high grade initially, 0.9. It'll average over the first 13 years 0.7, 0.6% copper. We have a low strip ratio, and so that contributes to that low cost.
Okay. Before we move on, I just want to get a sense of why you're, McEwen Copper is IPOing next year, right? I mean, what, first of all, why are you spinning off the subsidiary?
We were spinning it off because I didn't feel the market was understanding the value of this asset.
Right.
And investors tend to prefer a pure precious metal play or a pure copper play.
Interesting.
But we were in a situation where we were a relatively small company with a weak treasury at the time, and people looking at it and saying, this is a cash-hungry copper deposit. If you want to advance it, are we going to dilute the heck out of our shareholders by continuing to fund it? And so you can fund it easier in a separate company and retain a large interest by McEwen Mining and get a market value that people can point to and say, okay, that's some of the underlying value behind McEwen Copper. And do a secondary to raise some funds for McEwen's other projects.
What is your thesis for copper, the metal? Presumably you could just stick with gold, but you have obviously a strong conviction in this metal, otherwise you wouldn't be doing this. What's the future of copper?
Well, it wasn't like we went out and bought the copper recently.
Right.
When we formed McEwen Mining, there were two companies, Minera Andes, and its assets were in Argentina.
Yeah.
It had gold-silver production coming out of southern Argentina, and it owned this copper project.
Okay.
And we had U.S. Gold, which had properties in Mexico and Nevada. So we put them together, and I always liked this one because it was so big, but the copper price wasn't right, and we didn't have the money. But it's not really a pivot, it's just the world is electrifying, or wants to electrify, the energy transition, and the world wants to preserve its money. And we have the best of both worlds now. Okay, that's a fair point. All right, so we've talked about gold. Let's talk about copper now. I was reading a Bloomberg article that predicted that the demand for copper will increase by 50% by 2040. So over the next 18 to 20 years, it will increase by 50%, primarily from the transportation side. They're actually predicting that transportation will outpace or outstrip construction as the #1 sector for copper demand. Is that a projection or a future that you share? Certainly, when you read about all the projections of the auto manufacturers increasing their electric vehicle production lines or going almost exclusively to that, there's not enough copper right now to satisfy that demand.
So what's going to happen?
Well, you have to build new copper mines, but it takes longer to build copper mines today. There's more permitting required, longer lead times, and the capital's going up. So we think we have a project that we can advance to feasibility study, and then we're looking to get one that we can afford to build ourselves.
How long does it take to build out a copper mine, all the way from the exploration phase to the production phase?
It depends on the capital and the size of it. In this case, we're looking at updating our preliminary economic assessment, and that'll be out in the first quarter of next year.
Yes.
It'll take another 2 years, maybe a little bit longer, to create a feasibility study. And from that, you have to get your permits. So let's say 2 plus another year, year and a half, 3.5 years, and then you have to construct. We're looking, and the construction would take a couple of years. So you're talking in a decade almost.
Okay, well, let's just talk about the economics of copper then. I just spoke to a geologist before you who worked in this space as a banker in the late 90s, back when nobody believed copper would be $1 a pound. In the late 90s, it was below $1. Yeah, and now it's well, we know where it's at. It's above 450. Well, it's come back down a little bit, 350 a pound. You know, it's grown tremendously over the last 20 years. What was the primary cause of that growth over the last 20 years? And we'll talk about the future.
Probably it was due to just production not meeting with demand. You had rapid urbanization taking place in Asia.
Yeah.
China was the largest consumer of all metals in the last 5 years, 6 years. And so that demand, and then the changing technologies, looking at the regenerative energy technologies.
Right.
Like a windmill would use 500 pounds of copper,
Right.
or 1,500 pounds of copper. A bus would use 500 pounds of copper.
Yeah.
I mean, you start looking at the number of cars that are made every year and say, well, rather than putting gas in the tank, they're going to put electric wire around. There's going to be their engines.
One thing I've learned about copper that's important is that it's not substitutable in many applications, including in batteries, which means that if the price of copper were to go to a certain level, higher, much higher than today's level, you can't really, if people can't afford to buy, I mean, not having enough copper is one thing, but if you can't afford to buy copper as an industry, we're in deep trouble, right? You need copper to build the things we need in our computers and our everyday life. So what I'm saying, Rob, is that yes, copper has upside, but it can't be too expensive. Do you agree with that view?
Well, when prices rise, people look for substitutions. Are there substitutions?
I've been told no, so I don't know.
Maybe someone's going to come along and come up with a nanotechnology solution to that, create something that has the same properties.
Yeah.
That's a bit of a way off, but at the moment, I don't see an abatement of demand yet. I do see people starting to look and say, well, how can we source copper? Will you see auto manufacturers, you're seeing Ford cutting deals with lithium producers. You'll probably see manufacturers saying, well, maybe we can invest in copper companies like an automobile industry, looking at that.
Is there a price of copper in the future that makes sense to you? I mean, you've come on the show and said that 5,000 gold makes sense to you. What about for copper? Have you thought about this?
Well, we're profitable at $3, or at least in the projections.
Okay.
I could see a $6 or $8 copper price.
Yeah. Okay. That would be more than double our current price, current value.
Yeah, we were up just short of $5.
Yeah.
A little over a year ago.
Looking at your capital structure, you have slightly more debt than cash right now. $65 million versus $47.8 million. Are you planning to add to that debt, pay it down? What are you planning to do with the $48 million of cash?
Well, the $48 million is just going to development of our projects, our precious metal projects, and it also reflects its consolidation of the cash we have also in McEwen Copper. As we own 68%, we consolidate the financials of McEwen Copper. So we spent $31 million on exploration in the first half of this year. At 7 on our gold properties, and the rest is on Los Azules advancing that. We'll be spending about the same amount of money in the second half of this year. So we're going to be in a position where, although our mines are producing a cash positive cash flow, from an accounting standpoint, our earnings will not reflect a profit for quite a while as we develop Los Azules.
I'm curious as to whether or not economic cycles or changes in interest rates would change your budgeting priorities.
I'm a big believer in the price of gold, as you said earlier on. And I think we're on the cusp of being able to unleash a couple of good stories on our precious metal area. So I don't want to give that up. And on the copper, higher interest rates, could that slow the economy down? Perhaps. Would it slow the auto manufacturers from producing cars?
Well, specifically for you, I mean, let's suppose interest rates continue to rise. Would that change your rate of exploration, your rate of building out projects? Would that change how you choose to finance your projects? More equity versus debt, or the other way around, for example? Or not much?
It's the price of gold and the price of copper that'll be the bigger determinant.
I understand. Okay. Final question, because we only have a few minutes left, Rob. Some people might look, you personally invested $220 million in this company. Some people might ask you, why are you still doing this? I mean, what's driving you? You could just take your $200 million and retire. What are you trying to build? What's your legacy?
A lot of the money that I've made in the mining industry goes into education and medical research. And I feel that that's an area that can have a benefit to a large number of people. So my wife and I set up an institute to do research in stem cell and regenerative medicine in Toronto. And I think that could profoundly improve the lives of many people. And I think that's a good use of these funds. And I find that the mining industry has been an excellent source for building capital for me.
Right.
So in here, right now it's not in this particular situation, but it just seems to be an area that I can build some wealth here and then put it into areas that can have a much bigger benefit to a wider audience.
If you were to compare the history of McEwen Mining up until now and compare that to the same period of Goldcorp, I'm sure you've been asked about this before, what were the differences and the challenges and opportunities?
A couple of differences. Well, Goldcorp, we certainly had challenges.
Yeah.
We went through a 46-month-long labor strike. I got a death threat out of it. I haven't had a death threat yet, although some shareholders have suggested it. We faced operational issues. We had really a big discovery at Goldcorp. And they didn't want to build a bigger mine at first. And I said, look, we're finding gold that we're increasing our resources 30% a year. Come on, tell me, why should we build on this basis? And it's, so there were shareholder issues. I took 5 companies over 8 years and compressed them into one to create Goldcorp. So there were some trials. The metal prices moved up and down. I mean,
did advancements in technology make exploration easier the second time round?
The industry's slow to adapt. No.
Okay.
Well, there is some satellite work. They came up with hyperspectral analysis. We're using this tool that came out of the space program to look at our core samples, so you get a better sense of the mineralogy and the lithology or structure.
Right. Perhaps in the future, robots will be doing the excavation?
Yes, and AI is coming into this space, and I think it'll make a big difference. There is a shortage of manpower, labor, so I think you're going to see more and more automation coming into this industry.
Right.
And certainly there's some wonderful examples right now of mines that have gone that way. What we really need to do is, how can we drill faster, or maybe can we get away from drilling altogether? Is there another way of looking into the ground and quantifying what's in the ground and then extracting it faster, surgically, with less lingering problems after you close the mine?
It is interesting how this industry hasn't had its fracking moment yet in terms of technological leaps and bounds. Perhaps that's due to innovation from the technology side. Maybe there's not a lot of interest from engineers to develop for the space. What do you think?
Some of the tech guys are starting to come into this area, and they started really more excited about mining in space between Mars and Saturn and the asteroid belt. And there are a couple of groups up there that, no, I'm serious.
Yeah.
There's
You're
a
right.
real commercial effort going into space, and NASA went around and it was able to, through this hyperspectral analysis, to quantify these asteroids. Well, that's a platinum one, that's an iron ore one. So people are, sort of Wild West is starting to appear, and people going up there and trying to stake claims on these asteroids, and saying, well, if we could find it up there, we can start refining it up there and using it as a building material to build structures in space, rather than bringing it back to Earth, building and taking back up. Just using the raw materials that are floating around in space.
What would you say to a young person going to college today that maybe mining is the right industry for him or her to go into? How would you convince them to join this industry?
Do you want to make a lot of money? Do you want to travel the world? Do you want to have little competition? Okay. Do you want to go into high tech and your graduating class, the entire class goes into high tech? Or you want to go into entertainment where everybody thinks they can sing or dance?
It's interesting because 20 years ago, most of the Harvard Business School class went to Wall Street. Now most of them are going to tech startups in Silicon Valley.
So what if you take a look at who's coming out of school, what enrollments are going down? Right. Mining, engineering, geology. So move that ahead to graduation. There's not a lot of people coming out. The Royal Bank does a survey of industries every year and says, what are the highest paying industries in the country? Mining is right up at the top.
That's true, yeah.
So if you figure there's a whole bunch of people with gray hair like me that are going to be leaving the industry at some point, and you're coming in, there's a void. And I think a lot of people, if they're motivated, can get to the top of an industry much faster in the mining industry. And it is a high-paying industry, and it is somewhat exciting when you make discoveries and run around, and you can start thinking about innovating. How can I alter this? It's sort of like Ben and Jerry ice cream, and they went, well, we don't want to be corporate guys. And they said, but you could maybe change the attitude of people. They said, really? Well, maybe people could come into the mining industry and say, well, let's be a little more gentle on the environment. Right. Let's just start thinking of other uses. And so that's why I'm really excited about this architect who's involved with our project, because I think it'll make a big, big difference.
Finally, I want to close on McEwen Mining. What is your ultimate vision of this company? Is it to build the next gold core? You've done it once.
It's taking a little longer here, but that would be nice. It would be nice to do that. And I think we have the raw material to do that.
Okay. Well, best of luck, and I hope to speak to you again soon. Thank you so much, Rob. It's been a real honor.
Thank you, David. It's been a pleasure, as always.
And thank you for watching Kitco News. I'm David Lin.
Kitco News special coverage of the Precious Metal Summit is brought to you by Nucor Gold.